I feel good about that.
Look at that.
Yeah. What I say, like the low 90s or something? Wow, I'm an alcoholic. No, I'm just joking. Wow, that's good. I'm like really patting myself on the back right now.
Welcome to the Whiskey and Real Estate Podcast. I'm Alex Peterson, and tonight I am joined by my good friend, Andrew Denton, owner of Green Brook Insurance.
Hello, Green Brook
Welcome to the
Insurance.
show, man. Excited to have you here.
Thank you.
Cheers.
Thank you very much.
Oh, that's sweet. I forgot that there was that much sweetness in there. All right, what are you getting when you smell it, though?
You said it sweet. I'm thinking fruit.
That's enjoyable. From the website of the manufacturer for this whiskey, I'm going to pull this up. They say on the nose, which is, that's when you're smelling it, they're going to call it on the nose. They're claiming coconut oil, honey, lemon zest, and dried oak.
Dried oak. Okay, I was going to say there's kind of this smoky texture, smoky element to it, smoky essence. I could see the lemon zest. Honey for sure.
So we swirl it, we get it to open up a little bit. That helps us be able to smell it. And now that we've already had one, we got to take the second drink. The second drink is always different than the first one. Your mouth's got to acclimate to it. So your second drink, you're probably going to taste something different this time. So
it's not harsh at all. What would you say in terms of the proof?
I guess we're probably in the 90 range on this one.
Definitely, yeah, but not quite. I wouldn't say high 90s. While it's not as viscous, it's not as harsh, right? It's really sweet. My wife likes sweet drinks. I feel like this is something that she might even be able to do, even though she's not a whiskey person. But
so we've got a 12-year single malt that we're enjoying now. But we'll talk more about this in a minute. Andrew, tell me a little bit, how did you get started? Why'd you start your own office? Why aren't you just like working for State Farm, American Family, any of the big guys? So what got you started and why your own place?
Well, I was actually working for one of the big guys, Liberty Mutual.
Okay.
And but even prior to starting that, getting interested in the finance sector and insurance, and I got some really good advice from some colleagues of mine, mentors, friends, friend tours, I call them. And,
I like that.
And they said, if you're going to get into insurance, the natural progression is that you're going to either go up in management or start your own firm. So even at the offset of starting at Liberty Mutual, I knew that I was going to do something either in management or starting my own firm. So it was pretty soon that I knew I was going to start Green Brook. And that was the plan from before day one.
Really? Really? So how long were you with Liberty before you launched Green Brook?
3 years. 3 years with Liberty. I started quite, maybe year two, I started getting into the weeds of like really figuring it out and plotting it out with my wife and some other people. So
when did Green Brook officially launch?
It will be 7 years ago.
No way.
Yeah.
What got you into insurance though? Like, why'd you choose that path?
It's a long story. I have a very diverse work background, but by the time we moved to Illinois, we actually moved from my wife's job.
Okay.
And so I was working a job in sales, a random job in sales, and I was doing pretty good. And my wife was like, hey, why don't you try something in financial services?
What were you selling?
I was actually selling personal training packages.
Ooh,
yeah, it's a long story. It's a crazy story.
Not shocked.
Yeah.
You've seen this guy, he's huge.
Yeah, well, yeah, I did not intend to do that. I walked into a gym when we first moved here and I was looking for a place to play basketball. It's a crazy story. I was actually looking for a place to play basketball. The week before I tried out Lifetime. This time I was going to LA Fitness. I was like, hey, I had a membership in DC where we lived before. I would like a free 1 week membership. And the lady said like, hey, I wish you were looking for a job. I was like, well, I kind of am. But I was applying. I worked in the government before as a contractor, the federal government. I think you know that.
Yeah.
And so by the time I moved here, I was still on that path. But my wife was working as a contractor to the federal government, and I was not. I was just kind of applying different places, including FBI. And so this person said, I wish you were looking for a job. And I was like, my brother-in-law had been saying, man, you have a personality for sales. You should try sales. I'm like, no. But long story short, I got a job because this lady just randomly said that. In sales, it went really well early on, and then just kept kind of killing it, and started to think about sales now, and not federal government work, but sales. And so again, wife encouragement, friends, mentors encouragement. They were like, "Hey, this is something you should consider," and I did.
There you go.
Yeah, crazy story.
So your wife is a big reason why you're in.
She's a big deal, yeah.
Which, to be completely fair, my wife is the biggest reason I'm in real estate.
Is that right?
100%.
Huh.
Yeah, because I was working sales prior to getting into real estate.
Wow.
I sold books, wasn't loving it. I was good at it,
Yeah.
wasn't loving it. And so I had started interviewing around, trying to find something else to do. Interviewed at Northwestern Mutual to maybe do life insurance.
Yes, I'm very familiar. Love them.
My wife was like, have you thought about real estate? Like, I think you'd be really good at that. Here we are in 2025, no looking back.
You went from selling books to selling homes.
Yes, sir.
Legit.
Yeah, Andrew and I have been friends for several years now. We got connected because of church.
Yes.
Just kind of crossed paths at that point, and then I got into real estate, and we reconnected because Andrew's in insurance.
Yes.
I need insurance people. What kind of like misconceptions have you run across when people are thinking about homeowners insurance and buying their first house?
Well, one misconception I would say is that insurance covers everything. That is not the case. Insurance doesn't cover everything. When you think about insurance, think in terms of an event, a particular thing that happens at a moment in time that causes damage. Wear and tear type situation, insurance isn't going to cover that because that's a maintenance issue.
Okay.
So that would be one misconception. Another one might be, and I get this quite often, people might look at their insurance policy and see that, hey, you're covering me for X amount. My home was only worth this. And they're looking at the real estate value of the home, and the reality is the dwelling coverage is going to be different than that market real estate value.
That's a really important thing to know, because I know a lot of homeowners who've been like, this insurance agent, they've got me quoted out at a $500,000 policy. My home's only worth $400,000.
Yep.
Like, what are they doing?
Yeah,
Talk
for
to me
sure.
about that discrepancy.
Yeah,
That's a very common thing where we'll see the home valued and the policy is higher than what the home is worth.
Yeah.
They think they're overcovered and they're being
Right.
taken advantage of.
Yeah, and it can be frustrating. I definitely understand. The dwelling value of the home is made up of, there's basically a valuation system that each carrier has. Every carrier has it. And you put in the makeup of the home, the square footage, how many bathrooms it has, and all of the different features in the home, and it spits out a number.
And now carriers, for those of you who don't know, carriers is going to be
an insurer or an insurance
American
company.
Family, Liberty,
yes, American Family, State Farm,
State Farm,
Safeco,
all
right.
of those, whatever brand it might be.
Yeah, there's carriers because they carry the risk of financial loss. They're also insurers. They insure you. The insured is the person who owns the policy, the homeowner. So you would be the insured. But then the insurer or the carrier, they have this valuation system, and it spits out a price. That $500,000, for instance, when your home was only worth, $395K.
Right.
And so that value is based on the makeup of your home, so material, but then they also have to factor in, how much is it going to cost for debris removal?
Oh, yeah.
Right, if you have a complete loss. So how much is the debris removal? How much is the material? How much is the cost of labor at that time? And so all those things put together would be the dwelling amount.
Got it.
And sometimes it's going to be different than the real estate value. Another thing that's interesting is that the exterior, like the ground, is not covered. The outside grass or whatever is not covered by insurance, but the structures are. So main, edifice, external, what we call other structures, those things are covered. Grass isn't covered. But anyway, that's a misconception that the dwelling amount in the policy should be the same as the real estate market cost.
Yeah. Now, you talked briefly about, what it covers. So maybe we can talk a little bit about what does home insurance cover and what is absolutely just not covered, and what maybe are some of those like optional things that vary based on where you are.
So I love talking about this stuff.
I hope so.
I get excited, and it's not the alcohol. No, we haven't been drinking that long, so we haven't had enough yet. So this is really good, by the way. I'm really enjoying it.
Yeah. Are you getting hints of like a
when you mentioned lemon before, I'm actually that's quite obvious now. It's like there's a little bite to it.
Yeah.
And then definitely honey, like you mentioned before.
I kind of forgot this bottle was on my shelf, to be totally honest.
What is it called? What is it called? What is it?
I'm not going to tell you yet.
Come on, man. Are you serious?
I'm serious. You're going to have to keep waiting. You have to keep waiting.
The suspense is real.
No, we're going to have to find out soon, because I did just finish that. So it almost borderlines on like a sherry finish. The sweetness you get in like a scotch that's finished in a sherry cast. You get that nice, just sweet fruit, deep fruit in the back end. I'm getting like hints of that in this. I don't think this is sherry finished unless I totally missed something.
And I'll just say you're way more sophisticated at this than me. But
sophisticated is a strong word for an enthusiast like myself.
Well, you're definitely more sophisticated than me. So.
All right, so what is almost always on just like a main primary single family home, what's almost always covered?
Here's the thing. When people talk about what's covered, there are two categories that I like to think about in your basic homeowner's policy. There's property. So think physical property.
Like my table and my whiskey collection?
Yes, your whiskey collection. That's actually, we should maybe talk about that. But yeah, your whiskey collection, table, furniture, so on and so forth. And then also, when I say property, that also includes the actual home itself, the structure of the home itself. And then the other thing that's covered is your guests and others that might come and visit.
Oh, really? So if I have like my brother coming from out of state, he and his family are here, something happens and his $1,200 laptop gets crushed because the house got smashed by a tornado.
That's good. That's actually really good. That's actually a perfect example. Another one that I use commonly is like, you first move into your home and you're having a housewarming party and you're mopping the kitchen floor. Somebody comes over early and then they slip on the kitchen floor. They break their arm. They have to go to the hospital for physical therapy, rehab, surgery, whatever. The medical bill comes to $200,000 for whatever reason.
Yeah.
That is covered by your liability insurance.
Is liability insurance always included on a homeowner's insurance policy?
That is such a good question. That's a good question. See, I get really excited about this because, so generally the answer is yes. On a standard insurance policy, the answer is yes. But if for some reason you fail to secure an insurance policy on your home, the lender, if you have a mortgage, will give you insurance. Oof. And it's called force-placed insurance or lender-placed insurance. Have you heard of this?
Crazy expensive too.
It's not only is it crazy expensive, but it doesn't cover things that the lender doesn't care about, including liability insurance.
Wow, so that's, all sorts of reasons too. One, yes, the lender requires that you're not closing on a house without insurance in place.
Yes, exactly.
But if you lapse on your insurance, you don't pay your policy, lender finds out, they're going to buy it, and if there's no liability insurance and somebody slips, now you're on the hook for $200,000 and you could lose your house. So insurance, I get that a lot of people, they've got this bad feeling about insurance. They don't like to feel like they're being forced to pay for something that in all reality, we're talking about the largest asset any average human being generally is going to hold.
This is your largest asset,
and why wouldn't you want to insure that, and maintain it and make sure the bank's not charging you 3 times what you could get through one like Andrew.
Yes, there you go. Green Brook Insurance.
Love it.
little plug. All right. But so that is one thing that the lenders don't cover, the liability. Another thing they might not cover is a really cool coverage called loss of use. Loss of use is, let's just say, whole home burns down. You can't live in the home. It's not habitable. You have to go to a hotel or rental home or something like that. Generally, your insurance, standard insurance policy will cover the hotel stay. It'll cover restaurant expenses because you've lost the use of your fridge. You've lost the use of your
when
pantry.
I'm looking at my policy, what am I looking for on that? What is that called?
It's called either loss of use typically, or it's additional living expenses are the two main names that it's called.
Perfect. I don't want to go too crazy deep because we could get lost.
I know, yeah.
If you guys do have insurance questions, definitely reach out to Andrew. We're going to make sure to have his information in the description for this video. This is probably not the first time I'm going to have to keep us from smiling because we both nerd out a little bit because
I know.
I love homes. I love making sure people are able to get into a home, and I want to make sure they protect that. And Andrew, he's making sure you get the coverage you need at a price that you can actually afford. And so, all right, so we got structure that's covered on most policies. We got personal property. We've got, if guests are over, that's all in kind of our standard.
We call it liability. Policy. It's your legal responsibility to pay for their medical expenses if you might be responsible in some way for their injury, or like you said, if somebody's property gets damaged on your property, if a case can be made that it's your responsibility to pay for repairs or whatever.
Like if a tree from my yard falls on my neighbor's shed and crushes it.
Absolutely.
That would be my problem.
Yes. Let me think about that for a little bit. Ooh.
Trick questions.
That's a really good question. So that tree... Ooh.
Or would that fall under acts of God and be on their policy?
No. That might be, if it's your tree in your yard,
Yeah.
Oh, that's going to be something that insurance companies might contest. So thank you for putting me on the spot with
Ooh.
that. That's a good one. So I might have to. There's so many facets. There's so many dynamics, but yeah, that's something that I would specifically reach out to a claims adjuster or an underwriter to get an answer about. So that's a really good one. That's a really, really good one.
What isn't then? Kind of what are some of those like normal not covered items? Like, is my driveway covered?
Yeah, your driveway. Yeah,
that's considered, even though it's part of like the land, it's not part of the physical structure of my house.
Yeah, well, that would be considered an other structure. Your deck back there is covered.
Okay.
Yeah, that
shed out back would be covered.
Shed is covered. That would be considered an other structure.
Fence.
Your fence would be considered an other structure.
Okay.
Yeah. So wind knocks it down. This is something that's interesting, and so it's sort of related, but it's kind of not. You have deductibles, right?
Yes.
Your deductible is the amount of money that you pay for a repair. Typically, you have two deductibles. You have your wind-hail deductible, and then you have what's called an all-perils deductible, another type of deductible. And so when you mentioned your fence, I thought about something.
Yeah.
If you had some vandalism or some fire, barbecuing or something like that, messed up your fence.
My neighbor drives a lawnmower through it.
Yes, and I met some of your neighbors there. No, I'm just kidding. So now you're subject to a particular deductible. So if it was a fire situation, it would be the all perils deductible. But if it was a wind or hail or a wind situation, wind knocked it down.
Yeah.
Storm, you would be subject to the storm or the wind deductible.
Got it. Well, while we're here, I know we're kind of bouncing around a little bit.
Yeah, we're bouncing around too much.
There's a lot that encompasses this insurance world, but deductibles are a really important piece to when someone's buying their first house and they're trying to determine like, okay, I've got this house, I know I need to insure it. Can you first define what a deductible is and then talk us through what variables change that monthly expense for me?
So a deductible is the amount of money that you're going to pay for a covered loss. So like if it's your table, if it's your fence out in the back, if it's your structure, if there's a kitchen fire.
Real life example, we had hail damage, had the adjuster come out.
Yes, yeah.
We paid I think it was a $1,500 deductible.
For instance, if it was a $20,000 loss, let's just say $20,000 loss. You pay $15,000, the insurance carrier pays what, $18,500?
$18,500.
Yep. $18,500 if it was
now,
a $20.
And again, I really want to kind of nail this in. The reality is if I'm paying $1,200, $1,500, $1,800 a year for my insurance, let's say $1,800 a year.
Okay.
And I had $18,000 that my insurance company just paid.
Yeah.
That's 10 years of me paying in to make that up.
That's right.
This is just one real life, real example of the amount of money you can save due to just existing.
Right, yeah.
Hey, before we keep going, I'm empty.
Oh.
So, how are you? You almost done?
I'm almost empty, but I'll crush this real quick.
All right, and then you got to tell us your last thoughts. I'll go grab the bottle, and you can tell us the last thoughts.
Last thoughts, yummy, yummy, yummy. Yummy for my tummy.
We have Glengoyne 12-year lemon zest, toffee apples. The bourbon casts add a fresh notes of citrus and vanilla. So that's probably why you were getting the bourbon vibes, is they do age this in sherry and bourbon casts.
I'm sophisticated.
Absolutely delicious. This was glorious. It's really not that expensive of a bottle either. I think this one comes in around that $60 price point. $60 for a 12-year. This is tasty.
So good.
And 43. So it's only 86 proof. So we were right there.
Oh, wow.
It's real low.
All right. I feel good about that.
Look at that.
Yeah. What I say, like the low 90s or something?
Yeah.
Wow. I'm an alcoholic. No, I'm just joking. Wow, that's good. I'm like really patting myself on the back right now.
All right, we're back. We've got round two, something completely different.
Yeah.
Ooh, yes, very different. I do not get any of the sweetness that I just got on the nose.
Not at all.
There's oakiness, but let's be honest. Almost every whiskey is finished in oak at some point. So that's not saying much.
Yeah. I'm going to say this is going to be a higher proof. It's going to be more subtle, less fruity for sure. It's way sweeter than I thought it would be, actually.
Yes. This is one of my top fives.
Do you know what it is?
I do.
It's smoky. It's really smoky.
This is like a mid-tier smoke. And when he says smoke, it's referred to as peat.
Yes.
So this is a peated whiskey.
Okay.
This is not.
You don't think it's smoky?
It
Or
is.
peaty?
It's. I would not call this like a high peat or like heavily peated.
Okay, so
It's very mid tier as far as peating goes.
do people say peaty or no?
I don't know. I'm not that sophisticated.
Right. Did I just make that up?
I think so.
All right, cool.
All right, so we were talking deductibles. Deductibles are going to be the amount of money that I have to pay as the insured prior to the insurer paying out the remainder of said claim. So I have my portion of it that I have to pay. And now, if the damage is less than my deductible, should I be filing a claim? Why not?
You should literally no, not at all. Because what's going to happen is the insurance company's going to be like, oh, there's nothing we can do. It's lower than your deductible. And that's what's called a zero paid claim. Say it with me. Zero paid claim. It's a really bad thing. I wrote an article about it. Never file a zero paid claim because insurance companies look at that as a risk factor, a negative risk factor.
Negative risk factor. So this would be a way to help increase your premiums.
It could potentially increase your premiums. It could potentially, with other carriers, when we've shopped around for carriers, one of yours actually, shopped around for him, and some of the carriers were denying him because he had a zero paid claim. Yeah,
wild.
It's annoying. Yeah, it's a risk factor.
So noted. Whatever your deductible is, figure out what it's going to cost you. Prior to submitting.
We encourage our clients to call us and let's talk about it before you submit a home insurance claim in particular. We want to talk about it before we move forward with the claim.
So we've got two different types of deductibles, though, you mentioned. So there's the all perils deductible and the wind hail deductible.
Yeah, generally.
So they function similarly, right? So it's going to be the same basic concept. It's just what constituted the damage that's going to determine which group it falls into.
You got it, yeah.
Perfect. We're looking to keep my premiums down though. So I'm on a fixed budget. I'm already spending all my money to get into this house because interest rates are high. I have no extra money because I've spent it all on my down payment. Now I'm coming to you and I'm like, I don't have a ton of wiggle room here. What can I do to modify that monthly payment?
Well, since we're talking about deductibles, something that people do, and this is something that we recommend, is if you can maintain, if it's possible, to maintain an emergency fund with higher deductible amount in it, like $5,000 as an example. If you can maintain an emergency fund of $5,000, it might be a good idea to increase your deductible to $5,000 because the more you pay for, damage, repairs, the less the insurance company has to pay. So to use your example with the roof, you spend $1,500 for the repair. The insurance company spends $18,500. Okay, so let's say you spend $5,000, the insurance company pays less, right? $15,000.
Right.
So since they're paying less, they can charge you less. And so the higher your deductible, the lower the insurance premium. So if you want to save on that monthly expense, if you can maintain an emergency fund of a higher amount, $5,000 in this example, then it will make your premium lower.
I've got to assume, to your point previously as well, because you don't want to make a zero paid claim. If I have a higher deductible, it's going to be even better in the insurance company's eyes because that raises the bar.
You got it.
Right?
You got it. You're less of a risk to them spending money on your behalf. And it depends on how you look at it. But insurance companies basically see the risk that you're bringing on as a risk acquisition. They're looking at a client and they're saying, well, what is the likelihood of losing money because of them? Or what is the likelihood of making money? These for-profit companies are concerned about that. And so if they see you as a risk and they can probably make money off of you, then they'll give you a lower price. They'll incentivize.
But as a homeowner, like how do they rate you as a homeowner? Is it just like the location you live in?
For home insurance, you happen to be married.
Yes.
Generally, you would be considered a better risk. They factor in things like education, occupation, previous claims. One of the things that they think about, some carriers, is if you're more familiar with the claims process, there's a higher likelihood you'll file a claim.
Interesting.
So
all that stays on record for you.
Like 5 years.
Guy got the roof claim. I think that was in 22 that we did that.
2027.
So we're 2027 now. Any carrier I go to at this point, they all see the same kind of history.
Look at that report. They run the report, it pops up.
It's kind of like a credit score. It kind of follows you around for a minute.
Yeah, they're like, Alex, no.
That dude filed a claim.
No, he filed a claim. Okay, I'm not going to get too technical, but a little technical, okay?
Go for it.
They weight the factors differently.
Okay.
For instance, credit is also a factor, but credit might be weighted less than being married, having a spouse, or living in a spouse-like relationship.
Yeah.
We were talking about claims. That's a factor too, but carriers weight that differently.
Interesting.
Insurers weight those things. So that's why it's important to have different carriers that you're looking at. Just shop around with all of them.
So that's another really great piece
Yeah.
of advice. I'm going to loop back to your company. So
Yeah.
what makes your company unique?
So we have no allegiance to a particular carrier.
Okay.
Our allegiance is to our clients. So that's one of the values that we add, is that we indiscriminately just shop with all the carriers, and whoever is the most competitive, we offer. Now, all of our carriers are financially strong. They're highly rated in terms of their financial strength. And
Now,
so,
is that something you track as a business owner to
Yeah.
make sure that you're only putting forth good?
And so most of our carriers are A plus. They're different credit rating companies, just like we have Experian, TransUnion. There's like Moody's, Fitch, Standard & Poor's, AM Best that rate the financial strength. One went down to a B, but it's such a beast carrier, like that everyone knows this carrier because of the commercials and the marketing.
Yeah.
And we'll still offer the carrier. So that's one
So
fact.
you get to shop around, and you do that on the behalf of your clients. So like, I don't have to make 12 calls, talk to 12 different insurance
Yes,
reps,
exactly.
give my insurance information
Right,
to
yeah.
12 people.
That's the
You get to
value
do
that
it.
we add.
Now, typically, homeowners insurance is going to go up year after year after year. And that just kind of like automatically, like they click, you get your new policy. Like you're paying, instead of $1,800 this year, you're paying, $2,000. What can you do about that? I mean, like, are you just, because the minute you buy insurance with someone, I'm stuck with them for all eternity, right?
No, not quite. Not quite. Not at all. I mean, for Green Brook, from our perspective, like we can shop around every year, literally every year for you.
Okay.
It used to be that one risk factor is like, how much does this person hop around from year to year? Because insurance carriers typically make money off of you subsequent years. Long term. Right. So if you have been with Allstate, for instance, for 7 years, you're a better risk. You're more attractive to that carrier than someone who's only been with them for 2 years. So that's a factor. There is so much that you can talk about regarding how insurance companies' business models, like what they're trying to do and things like that. Like, I don't want to bore, your audience. Talk to knowledgeable agents. Green Brook is great. Talk to knowledgeable people and get a personalized experience, as personalized as you can. And that's helpful, right? Because some people, they might have good credit, but they might not be married or have college education. And so some carriers are going to respond to those things better and look at you as a better risk and charge you less.
So, covered a lot. I kind of want to get back to this whiskey, though. So, tell me now that you've been drinking on it for a little bit here. What are you tasting? What are you enjoying?
It's sweeter than I thought it would be. I would say this is going to be maybe a higher proof.
Okay.
Let me try to see if I can.
Still got a little bit in there?
Discern, yeah, I do. What the fruit is.
I'm not sure I can put a finger on exactly what fruit, but I get floral tones on the nose.
I could, yep.
Get a little like softness in the palate from that, and then fruit. But it's subtle. The fruit is subtle.
It's not as bitey like lemon.
Right. It's definitely not lemon. You get the peat, but the peat, even as you continue to drink it, it starts to fade, doesn't it? Like, it's not that first drink. It kind of hits you.
Yeah, it's not like intrusive. It's not like invasive. It's like subtle. It's pleasant. I like it. I like it more than I like the last one, and I like this one more. So
yeah, ready to find out what it was?
Yeah, let's do it.
All right, we have Nika from the Barrel. This is Japanese whiskey. Nika is one of my favorite distillers.
Nice.
Over there. Nika's got one that they call their coffee grain.
Oh wow! Look at that. The proof. You
were right on again. It's a 51% alcohol, so we're at 102.8.
Yeah. Wow.
Versus the 86 on the first one.
Wow. I feel so good.
Here is what we've got on a tasting website. They've got it listed as notes on the nose of cut flowers and fresh fruits, spice, and a little oak. The palate, full-bodied and punchy. Plenty of winter spice and toffee, a little caramel and vanilla, and a good mouthful of fruit. This is a blend. So this is not a single malt whiskey where you're going to get one grain, one mash into one barrel.
Interesting.
This, they're going to take multiple barrels, multiple difference, put them all together, marry them together, and let them kind of work themselves together and create this beautiful masterpiece.
How long does that happen? Like, how long does that?
Every distiller does different amounts of time for what they'll call the marrying of the spirits. So I'm not really sure what Nika does for this. I'm sure if you guys wanted to go online and check out Nika's website, they would have plenty of info.
I approve, Nika.
All right, so for first-time homeowners who they're getting ready, they're under contract on their first house, they need to go shop for insurance. What one thing should they be thinking about?
Man, I want to say read the policy. That's not, I mean, I realistically, a lot of people aren't going to read the policy when they're thinking about buying their house. Like a lot of people look at insurance as a means to the end of owning a home. I would say don't trivialize it. Don't reduce it to the means of the end of owning your home. It's the protection of your wealth. It's the protection of your income. It's the protection of your assets. It's one of the biggest assets you have. It's the protection of your family's financial future in some cases. So just respect it. Respect it, you know. So that doesn't mean necessarily reading, you know, everything. If you have a knowledgeable agent, that's what my advice would be. Get a knowledgeable agent who can break it down. Sometimes people are rushed with insurance, home insurance, because the realtor needs something, right? Loan officer needs something. And that's not a knock on them. They're just doing their job, right?
Right.
But you need to circle back around. You know, it's not a one-time thing. It's not
How do I vet out who's a knowledgeable agent? Like getting a knowledgeable agent is great advice, but like is there a question or a couple of questions that would be beneficial to keep in my arsenal to be like, if I ask this question,
that's a really good
a
question.
knowledgeable agent's going to know what they're talking about if I ask this.
Oh, God. One interesting question would be like, what's the difference between actual cash value and replacement cost? Actual cash value factors in the depreciation of your product, right? So if this phone or whatever, I purchased this phone for $100.
Great.
Can I do this? Can we go there?
Great deal.
Yeah, it was significantly
You bought a phone
more.
for $100,
Yeah,
guys.
no, this is a lot more than that. But like if I buy this phone for $100, and let's say it's the year 2023, 2025, it's now worth $80 brand new. But this is used, right? Like, so like the screen is like worn out, there's scratches or whatever on the side.
Yeah.
And so there's some depreciation, there's some wear and tear. This year, not only is it worth $80 just by virtue of new models coming out, but because of the depreciation, it's worth $50. So actual cash value, an actual cash value policy will give you your property back, factoring in the depreciation. So they give you $50 for this.
That doesn't sound like a good deal.
No, it's not. You're like pitching this. If you have a replacement cost policy, they'll give you this exact item back for the amount it's going to cost to just go and get it new.
So they'll give me the $100 to go buy the new version.
Well, would they give you the $100 or $80 to get this exact thing?
I guess that'd be the follow-up question then. Is it to get the newest model or is it to get the same thing?
It would be the $80 to get this.
Got it.
Right, yeah. So insurance is about what we call indemnification. It's a big word, but it basically means just restoring you to pre-loss condition.
Yeah.
So this is what you lost. They're going to restore it.
You lost your house. Your house was worth $400,000. We're building you back a house that was built to the $400,000 standard.
Yeah.
Market appreciates. It's a little more complicated within the real estate world than a phone. But
right, yeah.
For simplicity.
Basically, and sometimes you'll make out better. Sometimes you'll make out better because, sometimes you have, when you lose your house, you have, really nice windows that aren't made anymore.
Yeah.
Okay, so they're going to upgrade you to Pella windows or whatever.
Yeah.
So sometimes you make out a little bit better, but generally they try to be like zero, like right there.
So one of the questions I like to ask insurance agents is, why do you sell insurance?
Ooh, that's a really good question.
How about you answer that for the guests? Why do you sell insurance still today? Why are you an insurance broker?
I'm an insurance nerd at this point, but I'm personally more excited about people that I'm helping. So like the passion that I have around insurance is just like helping people.
There it is.
There
it is. That's the question I think people need to ask.
Did I answer well?
Because if I come to an agent and their reason for selling insurance is to help and to serve people, I know I'm going to get good service.
Good, yeah.
That to me is great. And then if you couple that with Andrew's question about differences within cash value,
yes,
you're going to put yourself in a great spot where you'll not only find someone who's passionate to help you and see your interests
makes
first,
perfect sense, yeah.
But you're going to be coupling that with expertise within the field, and you can almost guarantee you're going to have yourself a great agent that's going to be able to serve you and not themselves as the primary focus. So I think we're going to have to call that one for tonight. I'm going to have you back.
More questions. Come on.
We're going to do more questions. I really do want to hear some horror stories of the insurance world. So definitely come back. Seriously, if you have any questions, please don't hesitate to reach out to Andrew and his team. Andrew, just so everybody knows, where in the country can you help people?
Well, we're licensed in 11 states, so just reach out, and they can also go on the website and see the states that we're licensed in.
Perfect.
Because they keep adding. So.
Because Andrew has a website like a real professional. So Hey, I appreciate you, man.
Yeah.
Thank you so much. This has been a blast. Your insight into insurance has been great. If you guys have questions, comment below. Cheers to a great night.